Hi, y'all. Welcome to ACCT 2011, reporting on business performance. This course used to be called Financial Accounting, and the university changed the name into Reporting on Business Performance for various reasons. But first and foremost is just their branding issues, because financial accounting sounds very boring, and not a lot of people would enjoy it. Even though this is enjoy the name, even though this is a mandatory unit. Once again, my name is Gabriel Wu. I am trying to document every single thing I learned at university, subject by subject, week by week, at my my Bachelor of Commerce degree at the University of Sydney. I am paying 85 to 95,000 AUD, so that's Australian dollars, which is around 75 to 65 US dollars every single year at the University of Sydney. Therefore, in order to ensure that my tuition and my living expenses, room and board is not wasted, I want to ensure that I document every single thing that I learn in painful and minute detail, so that people from a third perspective could look in and see if university is worth it. All right, so let us go into a brief overview of ACCT 2011, reporting on business performance. It is a 2000 level subject. It is a year 2 subject. It is more challenging and demanding than year 1 subjects. As expected, there are 2 prerequisites for this class. Let's just get into the content, the structure, and the material. Okay, let me minimize. It's still too big. Minimize myself. All right, so ACCT 2011, reporting on business performance. Here we can see an overview of the course. This unit is a study that examines the applications of key accounting standards to financial statements, focusing on publicly listed entities. Here's the financial reporting element. It is publicly listed entities, entities of public interest that have a financial reporting requirement attached to it. Sole traders, partnerships usually do not have as stringent reporting requirements. Dude, I can't live without Coke Zero, by the way. So if you see me sipping on a mug, it's Coke Zero with ice in it. A beginning of an overview of financial reporting environment. It develops an understanding of how managerial accounting policies choices are made. The unit covers a range of important topics such as revenue recognition, intangible assets, and introduction to financial instruments. The underlying importance of different measurement approaches, ranging from historical cost to fair value, is an consistent theme throughout. The unit also explores the role of credible disclosures not directly covered by accounting standards as a stepping stone for business performance-based roles. Students understanding this unit's development of confidence, blah, blah, blah. So this is a 2000 level course. There are prerequisites. The prerequisites are ACCT or Buzz 1030, which I have done ACCT 1006 and Buzz 1030. So there are 2 prerequisites. So once again, this is a 6-unit full-time 1-semester course expected to have 2 hours of lectures and I think 1 hour of a tutorial. Let's look at the assessment. So the final exam is a hurdle test during the final exam period. Once again, final exams are back in person this year in 2024. Supervised exam, 50% of the weight. It is 2 hours in length. Small continuous assessment. So this is basically rocking up to your tutorial. If you rock up to your tutorial, you get 5% free. Small continuous assessments. These are online quizzes, 5%. Supervised mid-semester test, that's 20%. And assignment for a group written task, that is 20%. In week 3, at the end of week 3, you will have to form groups of 3 to 4 people that are responsible for the written assignments. Here's the assessment. Every single time when I get into a new class, I immediately write down how we are graded. So this is how we are graded. It is very important that you know how you are graded because that determines your grade. Once again, self-explanatory. All right, so let us close out of this. There's not a lot else to see here. And let's quickly look at the weekly schedule. Okay, what are we going to be learning week by week? Now, if you remember back to ACCT 1006, we learned about the basics of accounting. We learned about double entry accounting methods. In Buzz 1030, we learned about an introduction to accounting. So coming into ACCT 2011, we have some basic understanding of accounting, some basic understanding of how accounting statements are prepared. You go from journals and you go into ledgers, you go into the TBs, and then eventually you go into the 3 main financial statements. Okay, the P&L, the balance sheet, and the cash flow statement. Here we are looking. Okay, we're looking into the AASB. So you really need to know the AASB. What is this? What is the AASB? It is the Australian Accounting Standards Board. The Australian Accounting Standards Board sets accounting reporting standards for reporting entities operating within Australia. Okay. Why is this important? Why is it important that we understand the AASB? Because this is the rule and the language for which these financial statements are presented. Okay. So far, we know how the financial statements get to where it is. Okay. We know how it goes from a specific journal entry. If we buy an asset, we debit assets, PPE, for example, and we credit cash. Therefore, that entry goes into the ledger, goes into the TB, and then it goes into the balance sheet as an increase in assets and decrease in cash. Okay, so this is how financial reports are constructed. However, what are the rules? What are the guidelines? What are the guardrails that underpin how these reports are presented? Okay, and this is where this course comes into play. So week 1, this is today's week. We have no tutorial for this week, but I'm going to draw from week 2's tutorial, which is on module 1 for information. So we have an introduction to the CF. We have an introduction to the conceptual framework for financial reporting. That's what we're going to be talking about today, in addition to housekeeping. In module 2, week 2, we're going to be talking about measurement and choices of accounting methods. Week 3, accounting for assets. So this is where we talk about PPE. Week 4, accounting for assets. This is intangible assets. Week 5, accounting for leases. Okay, so leases are what we call right of use assets. Once again, remember the definition for an asset is what is the definition for an asset? We have it written down somewhere. Asset definition. Do we have it? Okay, controlled by, okay, so here is this. Here's a definition of an asset. Asset is a present economic resource, okay, a right that has the potential to produce economic benefits. That's what a present economic resource is. Controlled by the entity. Okay, controlled by the entity as a result of past events. Now think about it. If you are leasing an office space, is it an economic resource? Yes. Is it an economic resource as a result of past event? Yes. Is the lease economic resource controlled by the entity? Yes. Therefore, a lease is actually an asset. You don't really think about it, but people usually think of leases as lease liabilities, as lease payables, as lease expenses, not as lease assets, or else what we call right of use assets. So week 5 is going to be an interesting one, so keep an eye out for that one. Week 6, we'll talk about provisions and ethics. We have a mid-sem break. Now we talk about revenue. Revenue recognition is a tricky subject. Then we talk about accounting for income tax, accounting for financial instruments, equity. Equity is also very interesting. Accounting for extractive industries. The mining industry is massive in Australia, so accounting for extractive industries. Total presentation of financial statements, 13 review, and lastly we have the exam. Exam is very heavy, 50%, so y'all gonna want to make sure you know that. This is the textbook here, Henderson and Pearson, Issues in Financial Accounting, 16th edition. This is the book that we want. I have 2nd edition. Y'all get whatever you want. But financial reporting, issues in financial reporting, that's the textbook y'all gonna need. Let's close that down. Okay. So, moving on. Here's a pre-knowledge check, question with answers. There is a quiz for a pre-knowledge check, checking your understanding from ACCT2006 and Buzz 1030. This is the answer. Okay, this is the answer. Once again, this is the correct answer from the quiz. So you could pause it and you could look at it, or we're just going to move on. Okay, pause it if you want to look at it. Okay, here are the lecture notes. Instead of going through my lecture notes, what I'm going to do is actually go through the lecture slides. Okay, so we're going to have going through the lecture slides and then a quick overview of the lecture notes and then some questions from the tutorial. All right, so now that we have an understanding of the structure, the objective, the assessment methods, let's go over the lecture slides. So, ACCT 2011, 60% of it is calculation and 40% of it is theory. Okay, and that's a good way to think about this course. And reporting on business performance here, going into module 1. Here's an introduction to ACCT, application evaluation, apply specific accounting standards. We need perform professional judgment when we apply accounting standards. Once again, one of the accounting standards is about depreciation. Okay, depreciation, AASB 116, I think. 116, properly planned equipment. Professional judgment is needed when we choose a accounting standard. Okay, when we apply accounting standards. For example, what is the useful life? That requires professional judgment. What is the salvage value? That requires professional judgment. It also requires evaluation of the accounting standards. Accounting concepts, other accounting standards, accounting theory, and public interests should be considered in ACCT 2011. So key themes throughout this unit, it's pretty straightforward. Technical knowledge, critique, critical evaluate, what are the standards, how they're implemented, what does it mean for preparers of financial statements. We need to know many accounting policy choices. So this is the implementation. Policy choices is the implementation of accounting standards. You also need to know the policies. So this is the AASB, the Australian Accounting Standards Board. Key themes, accounting measurement, useful limitations, revised, professional judgment. That's what we talked about. As preparers of financial statements, there's a lot of judgments that are required when preparing them. Conceptual framework. What is the CF? What is the conceptual framework? The conceptual framework could be seen as a dictionary for dummies. The conceptual framework does not tell the preparers of the books directly how to report certain items, but it gives a framework, it gives a structure, it gives a backbone at a theoretical level. So a dictionary, for example, in the legal world has no legal power, but it is important and needed to interpret information. So the conceptual framework, learning objectives for this week, identify main sources of regulations for financial reporting. We're going to be talking about the AASB, the IASB, the International Accounting Standards Board from London, who sets the IFRS, the International Financial Reporting Standards structure, which is used by the majority of the world except the USA. The USA has FASB, the Financial Accounting Standards Board in the US, FASB, that sets the GAAP, the U.S. Generally Accepted Accounting Principles. We're not going to touch on that. For the purposes of our course, we are going to be focusing on AASB and the Australian interpretation of the International Financial Reporting Standard, the IFRS, as set out by the IASB. Okay, there are various differences between the Australian accounting standards and the U.S. accounting standards. And because the U.S. has the majority and the biggest capital markets, we still need to know something. Remember back to your Buzz 1030 days when we talked about inventory recognition, right? We have FIFO, LIFO, and an average cost. In Australia, first in, first out is not a thing. No. Last in, first out. LIFO. Okay, LIFO is not a thing in Australia. However, why do we still learn about it? Because in the U.S., LIFO is accepted under the generally accepted accounting principles set by the FASB. So, because U.S. has such a large capital market, we still have to learn a lot about them, unfortunately. Okay, so major sources of regulations of financial reporting, whether that be government authorities such as AASB, the IASB, the IFRS, or public companies listing requirements set out by the ASX. We're going to talk about the present accounting standards setting arrangement. So how are new accounting standards set, or how are old accounting standards revised? Okay. What is the relationship between AASB, IASB, FASB in the US, and ASX? And where does the conceptual framework come in? Okay, so there's a process. We can see here there is a process of communication when it comes to the setting of accounting standards. Then we're going to be talking about describing convergence and harmonization policy adopted by AASB. Once again, we want, in an ideal world, all accounting presentations will be the same. Will be following the same presentation standards. However, local industries may have different reporting structures. For example, Australia is really mining heavy, but let's say Netherlands is really tech heavy, okay, or Taiwan is really tech heavy. Australian rules setting authorities will be lobbied by the Australian mining industries to have more favorable accounting treatment for the mining industries, perhaps more lenient PPE structures, PPE depreciation structures. And therefore, we will have slight differences in the local presentations of financial reports. However, in recent years, there has been a convergence. A convergence means a coming together, a harmonization, alignment in policies adopted by AASB in relation to the internationally recognized IFRS standards. Understand the reasons for developing conceptual frameworks. We talked about CF as being a dictionary for interpretation, has no legal power. However, it helps and aids in interpretation. Describe objective ASB conceptual frameworks and elements of financial reporting. Describe a report entity concept and a role of general purpose financial reporting. Okay. So, when we think about government regulation, the Corporations Act of 2001 is the main thing that comes into mind. It is the main regulating act passed by Parliament of Australia, approved by the Queen, a representative of the Governor General of the Queen in Australia, and the Commonwealth about reporting. One of the things they say within the Corporations Act of 2001 is that financial reports should present a true and fair view of financial situations, of the going-ons and what is happening within the books. What happens when, and within the Corporations Act of 2001, there is another clause that says financial reports should follow Australian accounting standards. Now we get a very interesting situation. Within the broad framework of the Corporations Act of 2001, we have two requirements. Requirement number one is that financial reports should present information that is true and fair. Okay, that is not controversial. We all agree that financial reports should report information that is true and fair. On the other hand, within the Corporations Act of 2001, there is another requirement. The requirement that financial reports should be prepared in accordance to Australian accounting standards. Now, do we see a conflict here? If there is potentially a conflict between presenting something as true and fair, however, it does not comply with the Australian accounting standards, who takes precedence? And there's further interpretation in this that following the accounting standards takes precedence. Okay, following accounting standards is more important than presenting financial information in a true and fair manner. Okay. So this is something that is brought to the attention of many preparers of financial statements, that if there is a conflict between presenting something to be true and fair versus presenting something in accordance to Australian accounting standards, then Australian accounting standards should take dominion over the true and fair principle. So when we look at financial statements, the obligation to follow accounting standards trumps the obligation to present your books in a fair and unbiased manner. So when we look at financial reports as presented by ASX listed companies, they must follow accounting standards as opposed to only presenting a true and fair view. Now, in addition to government regulation, there is also listing requirements. So the ASX has listing requirements for all publicly listed entities on the ASX. Now, that does not just refer to entities such as BHP, Forrester, Combank, Westpac. Does not just refer to the ASX 200, does not just refer to the ASX listed companies. It also refers to the ASX listed entities, ETFs, for example. All right, objective 2, explain the present accounting standard setting requirement. Okay, so here's the slide from the textbook that's really important about how standards by the AASB are set. So we have the AASB as the Australian Accounting Standards Board. The AASB is required, is the body responsible for setting standards relating to financial reporting here in Australia. There is an oversight board for AASB appointed by Parliament, but that's not really that important. How does the AASB set standards? Well, the IASB considers the IASB. The IASB is the organization responsible for creating the International Financial Reporting Standards, the IFRS. The AASB will look at the IFRS and adopt standards that do not exist locally based on inspiration from the IASB. However, the AASB, the Australian Accounting Standard Board, does not just simply copy all information from the IASB. The Australian Accounting Standards Board actually considers Australian regulators, organizations, and local individuals when setting Australian standards. Once again, because the AASB is setting standards for the Australian market. So they take inspiration and take advice and take harmonization, alliance considerations from the IASB. However, it is up to the local needs and the local situations that AASB sets its standards. The Financial Reporting Council, once again, is appointed by Parliament, cannot vote, cannot veto, or cannot vote on AASB standards or the direct development of AASB standards. However, it could give AASB advice and appoint members to the AASB. So this is like the board towards the senior management of AASB, appointed by Parliament, which is appointed by the people. So this is sort of how the organization structure looks within Australia. The Australian Accounting Standards Board, this is the AASB. The major functions are to develop a conceptual framework to make accounting standards. Every time we see, for example, depreciation, AASB 116, they are the one who makes standards to participate in the development of a single set of worldwide accounting standards. This is the convergence and the harmonization we were talking about. What is ahead? Okay. Learning Objective 3 describe the convergence and harmonization policies adopted by AASB and IASB. So once again, it is ideal that internationally all financial reports follow the same reporting policies. However, that is unrealistic, and in recent years, local accounting standards boards have been converging and harmonizing local policies so that they are more in line with international standards. And this is just what that is, the IFRS. We've been talking about that. Understanding reasons for developing a conceptual framework. So what is a conceptual framework? So this is just some background. The conceptual framework, the benefits for a conceptual framework: more consistent and logical accounting standards, reduced barriers for international capital flow, once again, because of more logical accounting standards. Accounting standards are more accountable, improve communication between standard setters and constituents, more effective development of accounting standards. Pretty straightforward. Describe the objective of AASB conceptual framework and develop an element of financial statements. So here's the objective of the CF: to provide financial information about the reporting entity useful to existing and potential equity investors, lenders, and creditors in making decisions. So here's an example of relating resources to the entity. Is objective of the CF and objective of the conceptual framework. Okay. Then we talk about rules versus principle based. I think we have learned about that before. And then reporting entity concept, and that's it. All right, so I want to talk quickly about rules-based versus principles-based. Okay, so IASB's principles versus rules-based standards. So IASB is the International Accounting Standards Board. They give principles and not rules. Okay, what does that mean? What does that mean? Rules are strict and principles are more flexible. Okay, for example, when I say that, okay, here's an example of a principle versus a rule. If I say students should get enough sleep every night, that would be a principle-based rule, okay? That would be a principle-based standard. Students should get enough sleep every night. Now, you can interpret this principle, okay, as in students could sleep at 12 but wake up at 9, or students can sleep at 8 but wake up at 4, or students should sleep at 10 but wake up at 7. These are examples of rules-based. These are examples of principles-based. Rules-based, on the other hand, would be students must sleep at 10 and wake up at 7. Okay, that would be rules-based. So principle-based gives more room for interpretation, whereas rules-based is more strict and more rigid, however more specific, and room for less interpretation and room for less error. Okay, that's something we need to know. All right, so that's the lecture. Let's also go into some tutorial questions. So here are the tutorial questions for Module 1. What are the main sources and regulations of financial reporting in Australia? There are a few. The Corporations Act of 2001 and subsequent acts, subsequent related acts for the entity. We have AASB, the Australian Accounting Standards Board, and the Australian Accounting Standards as a result of the board's instructions. We have listing requirements. We also have international requirements. Okay, so these are the main sources of regulation for financial reporting in Australia. The Corporations Act of 2001 requires that financial reports must give a true and fair, so that's the missing part, true and fair view of financial position and performance. We talked about that. Here's some example. AHP. Okay. So AHP entered into the following transactions and events during 2017. So AHP is a company. AHP entered into a contract with Sydney Metals Manufacturing Ltd to purchase capital equipment at a cost of $5 million. Okay, so it entered into a purchase agreement to buy $5 million and paid a deposit of 5%. What is this deposit of 5%? That is an asset. Once again, why is it an asset? Why is it an asset? Let's look at their definition. Into your contract, it is an asset because in the event the contract fails, the company could ask for the 5% deposit back. Okay, so that's the first one. The second one, these are reviews of Buzz 1030 and ACCT2011. Really just the definitions of assets and liabilities. Pretty straightforward. Part B, AHP has a regular program of maintaining its plants and equipment. In order to provide for this program, it has established a provision for plant maintenance account, which the company shows with liabilities with its statement of financial performance. Now, this is very straightforward. It is a liability. What are we doing? We're trying to identify if they're assets or liabilities. Okay, part 3, AHP has non-participating, non-cumulative, redeemable preferred shares on issue. These are shown as components of equity. Is it an equity or is it a liability? That's our question now. However, the accountants believe that the preferred shares meet the definition of liabilities. Once again, because it is redeemable, okay, because these are redeemable, they are liabilities. Equity cannot be redeemable by definition. Who's going to redeem equity? The other equity holders? Now that doesn't count, right? So because it is a component of equity and it is, however, it is redeemable, therefore it is a liability. Make sure that's right. That is correct. Question D, as a result of an expansion program, the company applied for a government grant of $2 million as part of government employment enhancement program during 2017. It was informed that it has been awarded the grant to be paid during the 2018 reporting period. What is that? That is an asset. Okay. All right, so those are the tutorial discussion questions. Week 1 is usually quite relaxed. This is the course modules. Let's look at week 1's content. So far, so easy. Okay. Easy peasy. Nothing else to talk about here. So yeah, I believe this 28 minute video gives a good overview of ACCT 2011, and I hope that you guys will stick around for the entire course and you guys smash this course and get your HDs. Thanks for coming along. Take care and goodbye.